All right, well, welcome back to the iWealth podcast, and today we're talking about dividends and whether or not I need them or not.
Yeah, it might be a dividend.
Dividend. So I'm sorry.
Dividend.
Yeah.
But
Like when you read it, potato, potato. But.
right, exactly. So, Matt, when you're in a relationship with somebody and you do something nice for them,
Okay.
it like, the old saying, it pays dividends, meaning that it'll come back, kind of like reciprocity,
Yeah.
right? So it's a little bit like that. But no, when a company makes money, it has to pay it out to its shareholders.
Okay.
And so take any stock that's out there that has been BOG, we call them big, old, and good stocks, so something that's in the Dow, let's say, and they make, $100 million this quarter, and
Okay.
there's all these different shareholders, they get a little piece of that, and that's called dividend. And the way to think about it, it's similar to interest at a bank.
Okay.
If you take $100,000 and you put it in a CD and it pays you 5% and you get $5,000, that's your interest. If you take that $100,000 and you buy ABC stock might pay a 2% dividend, very similar to a 5% CD, but it would be $2,000 instead of $5,000.
Okay.
The difference, though, is that the stock has the ability to grow or shrink, depending on what's going on with the stock market. So over time, dividends are a great way to invest.
Yep.
And here's how they work. So let's say you put $10,000 in an XYZ stock or a mutual fund. It pays out $2,000, or let's say it pays out $200 in interest, dividends, and you reinvest those dividends and you buy more shares. Over time, history has shown that you're going to buy more shares on sale if you buy each and every month than you are trying to pick and choose where that right spot is to put the money in. And so a lot of times we'll have clients that want to have a dividend-paying stock or a dividend-paying mutual fund or a dividend-paying ETF. And really what it boils down to is the companies in there are making money and they're paying it back to you as a shareholder.
Yep.
You can either take it and live on it, or you can buy more shares with it.
Can you do like a index dividend combination where you just have only stocks that are paying dividends and do that as like an index fund? Is that a thing?
Yeah, it is a thing. In fact, there's all kinds of different indexes out there. Stocks that only increase their dividends every single year.
Okay.
There's stocks that there's ETFs that have no dividends. But yes, you can buy an ETF that specifically has dividend-paying stocks. Maybe it's the top 30, top 50.
Yep.
And you can just invest in those, and you can let that dividend buy you more shares. And in the time period that we just went through, when the market's off, 18 to 30%, you're buying more shares on sale.
Yep.
Over time, hopefully those share prices grow, and then you have a higher share price. Again, nothing's guaranteed, obviously, but that's the concept of the dividend.
So at the end of the day, we like the dividends.
We like the dividends. Now, flip side
Show
is
me
this.
the dividends,
Flip
not
side-
show me the money. It's show me the dividends.
Exactly. Flip side is this. Let's say that it's year 2000.
Okay.
And you're investing in some .com company that just started that's making no money.
Yep.
They don't make money, they're not paying a dividend. You have to make money in order to pay a dividend. That means I'm just paying you excess cash that we made as a company. Well, those companies did really well too, but you're betting on the fact that that company is going to be able to grow and someday pay a dividend.
Yep.
Some of them .com companies now pay a dividend, and they did for 20 years.
Interesting.
So you can't just say, I'm just going to invest in dividend stocks. You probably want to have some more diversification in that. But a lot of people don't understand the power of compounding interest and compounding dividends, which is why I wanted to make sure that we talked about it today.
Very cool. Yeah, it's a simple concept, but yet at the same time, there's a lot of layers to really understanding how it works for that particular individual.
Right.
That's the takeaway.
Yep.
Very cool. All right. Well, we will see you back here next time on the iWealth podcast.
All right. Thanks, Matt.